Hey everybody, Dan Fitzpatrick here, stockmarketmentor.com. Fits in 5 here, and we've got Netflix taking a dive. I just made that up. It's not that great. Anyway, so this is the thing. The company, I think it opened at like 20% down or something. Like, they just had really brutal numbers. I don't need to tell you any more about it. Chart speaks for itself. Peloton weighs a Peloton. So these are two stocks that really got crunched. With respect to Peloton, the downtrend is still intact. The thing about this is they announced today that they're halting production, and the reason they're halting production of those wonderful, bikes that make your butt really, really sore, and when ridden by heavy people who aren't used to riding bikes, they wind up sitting on the corner of the living room where the handles make great coat hangers, or if you're ironing your clothes, you put them there. That's great. I did the same thing ages ago with the Bowflex. Lots of hooks there. Anyway, so this could turn out to be a buying opportunity for Peloton. You see how it was up today, right? But here's the thing. No. Why would you want to buy something like this? This is a massive head and shoulder pattern here. The bloom has come off the rose, nothing but thorns here. I would totally stay away from this, without a doubt. Now, Netflix, we've got a similar thing here. Let me look at the weekly chart. I mean, here's the thing. If you're looking at Netflix like, oh, this is a buy, and I bought some today, I'll explain that in a second, you better be looking at it as a short-term trade because, look, this has been a brutal sell-off. It started a while ago, and while the high was at 700, this thing just closed down 44%. Do you think that's enough? Do you think that's enough of a pullback? I can show you a bunch of stocks, most of them owned by Cathie Woods, genius stock trading savant that she is, that have gone down a heck of a lot more than this. And so I would absolutely stay away from this. However, with that said, 3 standard deviations are these Bollinger Bands, and they give you a picture that 2 standard deviations, which is the typical one, that it doesn't. Like, yeah, this thing closed, it gapped down and closed way below these lower Bollinger Bands, and typically you're going to get kind of a snapback. But when you get a stock that closes below 3 standard deviations, and this has already been drifting lower, this is a recipe for a bounce of some type. It's kind of like against the laws of physics or trading for the stock to be this far out away from the mean, which is the 20-day moving average. And yet here we are. The low Bollinger Band is 396.93. The close today was 396.80. So this is a steep, steep, steep correction that is ripe for a rebound. I wouldn't look for much, though, but I would look for some, because look at the massive selling today, almost 60 million shares. That's a lot of puking. And after a puke fest is pretty much over, you'll get a little puking rally. That's what this is all about. So here's how I would trade this. Don't try to pick the bottom. You got plenty of time to get in if it does start rebounding. The high here is 409.15. I would set an alert at like 405 just to give you the heads up. And at 409.16, that's when I would look to start buying this thing. You get a little early start, okay, fine, whatever. But if the stock rallies above today's intraday high of 409.15, then you know the selling's over. Because if it wasn't over, the stock would not be able to rally above today's intraday high. So anyway, that's all I got for you. Members, a big old long one today. By the way, if you are not a member of Stock Market Mentor, this is kind of a good time to join, because we are at a point, we're getting very close, we're not there yet, But we're at a point where we're going to see a lot of opportunities now. We're still seeing all of these stocks puked up. We got to wait till that's done, and then we'll hop in, and our patience will have been rewarded. All right, that's it. I'll see you all next time. Have a great weekend.